About 9 months ago, I released a video on Meta criticizing the company's brand and cost control, and I gave the stock a neutral rating. Turns out I couldn't have been more wrong. Since that video, the stock has rallied over 100%, and it's almost back to the level it was when the company changed its name from Facebook. At the latest share price, the company has a valuation of $810 billion. It's got $54 billion of cash and investments and $18.4 billion of long-term debt, so the enterprise value is $775 billion. Taking into account the latest quarter, revenue over the last 12 months is $121 billion, net income is $22.5 billion, and free cash flow is $24.1 billion. That means the stock is now valued at 6.4 times revenue, 36 times earnings, and 32 times free cash flow. The turnaround in Meta's valuation can be explained by Mark Zuckerberg getting real about the company's position. Zuckerberg has got to work cutting costs and doubling down on the things that have previously made Meta such a success. Headcount at Meta has been cut by 14% and capex decreased by 18%. The company rolled out a new platform, Threads, started monetizing WhatsApp business users, and its Advantage ads program is delivering significantly more value to advertisers. In addition, the company bought back $793 million of stock. As a result of all this, Meta's numbers increased across the board. Revenue was up 11%, net income was up 16%, and daily active users were up 7% to 3.07 billion. All that said, there are some reasons to be cautious. Net income was up 16%, but it's still 30% below where it was in December 2020. In addition, the company is still planning to invest heavily in the metaverse, data centers, and AI. Capex will likely be in the 27 to 30 billion range this year. According to the Financial Times, Meta has blown over $40 billion on the metaverse so far. Plus, the rise in Meta stock is not just the company's doing. Improving inflation has sent the stock market back towards record highs, and that has given companies more confidence to run ads. If you assume Meta can grow revenues 10% a year for the next 10 years, then operate with a 30% net income margin, net income in 10 years' time would be roughly $94 billion. Apply a 25 times multiple and the valuation comes to roughly $2.4 trillion, which works out to an investment return of 11.5% a year. As I said in a previous video, businesses don't really have too many options when it comes to online advertising outside of Meta and Google. That continues to put Meta in a strong position, and there's probably more upside ahead, but these are my own personal opinions, not financial advice, and I've got no position in Meta stock. For more detailed investing ideas, make sure to visit our website overlookedalpha.com.